morning, friends. I am CA Ankit Gulgulia, and today we are here to discuss the implication of IndAS 115 on the real estate companies, on the contractor companies, and on other companies. As you are aware that from 1st of April 2018, the Ministry of Corporate Affairs have made applicable the IndAS 115. Essentially, IndAS 115 में जो एक मेजर शिफ्ट ऑफ आइडियोलॉजी है, वो शिफ्ट ऑफ आइडियोलॉजी ये है कि किसी भी बिल्डर को, किसी भी कॉन्ट्रैक्टर को अपना परफॉर्मेंस ऑब्लिगेशन कंप्लीट करने के बाद ही उस रेवेन्यू को रिकॉग्नाइज करना है जो उसे कस्टमर से प्राप्त होता है. से फॉर एग्जांपल कि you right now know that the builder recognizes revenue based on the cost incurred. So there is a percentage completion method that is being adopted. But what has been observed drastic as a change in IndAS 115 is that in 115 it says that the most important criteria will be the performance obligation being satisfied. So let us just discuss few of the very important provisions, and I will try to crack one myth also that IndAS 115 do not allow the percentage completion method. It still allows percentage completion method, but it allows it in a different modus operandi now. So let us discuss it. See, first of all, it starts with the theory. It starts with the name revenue from contracts with customers. So there are three most important words. First is the revenue, second is the contract, and third is the customers. When you talk about customers, what IndAS para 6 says is that customers should not be an intermediary. A customer must be the person who obtains the output directly from the seller. So he has to be somebody who is going to consume or is going to use the output of the seller directly, be it a builder, be it a contractor, whoever it may be. Predominantly, as you are aware that I have been related with the real estate companies for last 8-9 years in my practice. So my gamut will be to address to those companies right now through this video. Any sort of queries which are other than this can be taken up separately also. In the comment box, you can put up the comments of yours. So essentially now what happens is that when you talk about the real estate companies, see, the first thing is very important is to crack out the idea what is going to be the contract. So what the law says is there are some type of contracts which will not be governed with IndAS 115, and these will be governed with the respective contracts and the IndAS that has been prescribed for them. These are lease agreements, insurance contracts, any contracts of non-monetary exchanges, any contracts wherein which you are doing the JV consolidation as per the IndAS that has been prescribed. All these will be dealt separately by the respective IndAS. Once you identify these sort of transactions, you have to go to and refer to those IndAS and not to this current IndAS. Second thing is, a contract should have something which can result in an enforceability. The contract must be approved, it must be enforceable, and it should be in such a sense that it identifies the goods and services which are promised to be transferred to the ultimate customer. So now, when you talk about all of this process, one of the very important things that we will try to concentrate on is all the time we will talk about the performance obligation, because it is this performance obligation which will once get satisfied, only then it will give you the right to book the revenue, right? So if you are not able to perform the obligation, if you are not able to transfer the goods that has been prescribed as a builder, you will not be recognizing the revenue in the books. Now this is something which was not existing in the earlier AS7. AS7 did not had any criteria that you have to perform the obligation first. It just mentioned that if you have incurred the cost incurred in consequence in conjunction with the guidance note that was prescribed by the ICAI, this is the cost incurred, you can recognize the revenue. But not anymore. The builders cannot recognize the revenue unless first they are able to perform their obligations also. Now, Coming to the contract can be of different types. It can be modified also. It can be having the escalation prices also. So the IndAS gives prescription to everything in this. So we will not get into those details right now, because the agenda is to understand what sort of change has actually accrued because of the applicability of IndAS. Now, one important change that I actually realized was, if you talk about the revenue would be recognized in conjunction to two main events. The events can be either performance of obligation at a point of time or performance of obligation over a period of time, which are transferred to the final customer in similar modus operandi. Now, when we talk about over a period of time, the over a period of time has got its multiple criteria. One of the criteria of which is that the seller must have got a right to recover the consideration in proportion to the performance obligation to the extent which will be transferred in that single series individually. For example, say a builder who has done an agreement with a customer that I will construct 3 floors on this plot, and after construction of every floor, you have to pay me rupees 20 lakhs. Now, in this point of thing, if at 20 lakhs, the builder is able to hand over the first floor in control of the customer in such a sense that the customer is able to have a possession, or he can basically give the right of this possession to somebody else, then this 20 lakhs is something which will get entitled for revenue booking for the developer. Now, essential word is that the customer should have the control over that individual 20 lakhs, number one, of a floor, and number second is that the customer should be able to transfer its right of possession also, just to enunciate the fact that overall it is the customer who has got the right of that particular floor. So this is something which IndAS also allows. The second thing is, IndAS says that the distinction of the goods is something which is very, very mandatory. If you are not able to identify a performance obligation to the distinction of goods, you will have to keep clubbing the goods to that extent that you are able to identify one-to-one correlation between the promised goods and the performance obligation. So say for example that a flat is being sold and a car is being given as a gift. Even that distribution of that gift also will become a part of the overall bundle of the flat. So only once the flat is being given as the performance obligation, only then the revenue corresponding to the cost of the car also that has been received from the customer can be booked as a revenue in the books. Now, if that is the case, what happens from the contract costs point of view? See, what can happen is, what it says is that you cannot recognize the revenue unless you have transferred the goods and performed the performance obligation. But at the same time, if either of the party has performed the obligation, say the customer has made the payment or the builder has given the goods, then there arises a concept of recognition of the contract asset or the contract liability. There are multiple heads that can be basically recognized as the cost by the builder. It can be the direct material, it can be the labors, it can be other sort of expenses which are directly attributable to the project. These will all be recognized as the asset by the builder. Now, all this asset that has been recognized by the builder will be the asset that is directly allocable to a performance obligation. Correspondingly, whatever payments that have actually been received from the customer are against the asset that has been generated in the books, which will be ultimately transferred to the customer. On the process of the transfer, you are supposed to pass an entry which will be essentially like contract liability, which has already been incurred because of the receipt of the payments, debit in the books, because now it does not remain a liability because you have performed your obligation also, to the contract asset. The contract asset here will be the cost that you have incurred directly for the project. Remember, any sort of general overheads will still be counted as the expense head only. And whatever is the differential can be booked out as the profits. In any case, if there is a loss being booked, the impairment of contract assets, the guidelines are also being prescribed. Dear friends, as you know that Indian real estate industry is going through a radical change. It is going through a change where in which the GST has come in, the RERA has come in, now the IndAS has come in, a lot of stringencies have happened. But I personally feel that what has happened in this IndAS is that the reporting agencies, whether it is ICI or MCA, have tried to correlate this with what has been already prescribed in RERA. When you talk about RERA, RERA plays a lot of crucial significance, and it lays a lot of, I would say, emphasis on the role of the performance obligation. And this has been what has been tried to be captured in the books of accounts also by eliminating any scope wherein which the builder is able to book the revenue without first performing the obligation. At the same time, I feel this will bring in a radical change in the books of accounts for the financial year 18-19. And once it takes the course of time, a lot of interesting things can come out when you talk about the implication of the ICDS also, which is the Income Tax Computation and Disclosure Standards. Because don't forget, this time even the ICDS has been made applicable to the builder. So the ICDS must be taken in conjunction with what the IndAS 115 prescribes. Before I close this video, I have read in a lot of media, I have read in this lot of independent companies also who are working in real estate. They say that IndAS 115 will make revenue booking in such a sense that only once you are able to complete the project, only then you are able to recognize the revenue. It will create hue and havoc and everything. In my personal view, after going through the IndAS, what I feel is, and by applying it with the companies that we are right now doing, I feel that it is not the case. It's going to be judiciously understood, and it is a very clear-cut demarcation saying that IndAS allows the performance obligation even if they are broken in a series, subject to the conditions being met. So still to that extent, I would say percentage completion method, it still remains, but it gets applied in a different modus operandi. I feel that I have discussed about the provisions. In case if you feel that there are further queries that you have, you can write down to me, you can mail me out, or you can use the comment box. Thank you so much.